In 2025, the economy is a battlefield. And your savings account is either helping you survive or slowly draining your future. Most people don't even realize it. But the place where they park their money could be stealing hundreds of dollars a year from them in silence. Today, we expose what's actually good and what you absolutely need to avoid when it comes to savings accounts. One of the most trusted names in banking is Chase, owned by JP Morgan.
You'd think that with a name this big, your money would be in good hands.
It earns its place among the stronger savings accounts this year, even if it doesn't quite make it to the very top. They even hide the interest rate behind a separate link on their website. Feels like they're hoping you won't notice, because it gave better rates to new customers, while quietly offering lower ones to existing users. That lack of transparency dents the trust. And when it comes to your money, trust is everything. It's still a useful account, but it comes with baggage. When you open an account with them, you get both a checking and savings account that work together like a dream. Their savings side pays up to 3.80%, and even the checking account pays interest, a rare move. To unlock the full savings rate, you'll need to set up a direct deposit or transfer in $5,000 in a month. But here's what makes SoFi stand out. If you do that, they'll reward you with a welcome bonus of up to $300. If you're saving money to beat inflation, Chase is one of the worst places to keep it. It does its job without trying to wow you. Interestingly, the Apple savings account also pays 3.65% and is run by Goldman too. But there's a catch. To get that Apple account, you must own an iPhone and get approved for an Apple Card. Not everyone qualifies, and that limits access. Whether you're saving for a house, a vacation, or an emergency fund, you can keep your goals visually separated and track progress easily. Forbright gives 4.25%. Valley Direct has 4.20% for new users. And Lending Club offers 4.40% if you deposit $250 monthly. These are high-yield options. No fluff, no tricks. If you're only chasing numbers, these are your friends. It's not just a savings account, it's a system. They partner with banks, and if something goes wrong with the middleman, as it did with Yada, you could lose money and not be protected. Real savings accounts from FDIC-insured banks are safer. And in 2025, safety matters more than ever. You just need to know where to put your money. And that system is why SoFi earns our top rating. This is what S-tier looks like. If you move to an A or S-tier account, you could literally be earning hundreds of dollars more just for existing. This isn't about working harder. It's about being smarter with what you already have. It's not just underwhelming, it's dangerous for your financial growth. But that name feels like a cruel joke. Okay, $100 just to open it, and then an $8 monthly fee unless you qualify for a waiver. Worst of all, the interest rate is 0.01%. Even customers with $100,000 in assets only get 0.04%. It's like they're punishing you for trusting them with your money. Big brand or not, it belongs at the bottom, but its future is uncertain. Goldman is trying to exit the Apple partnership. Nobody knows what happens next. That uncertainty, combined with its exclusivity, keeps it from ranking higher. Meanwhile, Marcus is open to everyone, solid and transparent. That simplicity earns it extra points. But if you dig just a little deeper, you'll realize something shocking. At the time of recording this, it offers 3.60% APY. No hidden fees, no minimums, and no games. That's over 360 times more than what Chase is offering. Simple, clean, and pays a respectable rate. Rates are slightly lower now than they were a year ago, but that's normal. Savings accounts follow the Federal Reserve. If the Fed lowers rates, banks follow. It's not about greed. It's about how the system works. Their most popular savings account pays just 0.01% interest. That means if you have $10,000 saved, Chase will reward you with a single dollar per year. Not 10, not 100, it's just one. And it doesn't stop there. Even open and keep the account running without penalties, you'll need to dodge monthly service fees or meet specific requirements. On the other hand, American Express surprises many people with their high-yield savings account. American Express makes it easy. No fancy features, but consistent value. That makes it a reliable player. Not flashy, but dependable. And we looked at Capital One. Their 360 performance savings account also pays 3.60% APY and gives you the flexibility to create multiple savings accounts for different goals. can set up one for travel, another for emergencies, and more, all within the same interface. Plus, Capital One still offers a few physical branch locations, which is rare for an online-savvy bank. For anyone who wants the blend of digital and in-person, that's a solid bonus. But there's a problem. In a recent lawsuit, Capital One agreed to pay $425 million next. We explored Marcus by Goldman Sachs. It offers a straightforward 3.65% interest rate, no fees, and easy access. The Apple option is cool if you're deep in the Apple ecosystem. Now let's talk about a personal favorite, SoFi. And it doesn't stop there. SoFi lets you organize your money using vaults, like digital envelopes for your goals. Bank of America calls their product the Advantage Savings Account. Meanwhile, Barclays offers 2 online savings accounts. One pays 3.70%, not bad. But their tiered savings account is the real star. If you save under $250,000, you earn 4.00%. If you go over, it bumps to 4.20%. That's one of the highest rates on the market. It's the kind of account that works silently in the background, earning you solid money while you sleep. Citibank is another contender. Their Savings Connect account gives you 4.00%, and their Platinum Savings gives 4.10%. If you maintain at least $5,000, both have no annoying fees. It's simple math. If you've got the balance, go with the Platinum. Not, the Connect option still does a great job. But Wells Fargo, a disaster. Their way to save account charges you a fee and gives you just 0.01% back. Even their so-called Platinum account is stuck at the same miserable rate. Wells Fargo is playing a different game, one where the house always wins and you always lose. There's no room for that here. Discover is more well known for credit cards, but they've stepped into savings and done a good job. They pay 3.60%, offer great customer support, and now that they're officially owned by Capital One, the brand might change or not. For now, it's solid, respected, and earns a good spot. Then came the unexpected twist. Busbank. Not only do they offer 4.20% interest, one of the highest, but they also have a second savings account that pays you in airline miles. That's right, instead of cash, you earn 2 American Airlines miles per dollar saved each year. There's even a 10,000-mile bonus if you meet certain deposit requirements. For travel hackers, this is a hidden gold mine. Busbank proves that savings can be more than just numbers. They can be experiences. Ally is another strong performer. Their bucket system helps you organize savings, and their extra features, like boosters, make saving automatic. Whether it's rounding up purchases or auto-transferring cash, Ally gives you tools to build better habits. It may not be as innovative as SoFi or as high-paying as Bus, but it's dependable. There are others too. Bread Savings offers a whopping 4.30%, but here's a warning. Some fintech cash accounts like Wealthfront or Betterment might offer good rates too, but they aren't actual banks. So what's the takeaway? If you're using a D-tier account, you're giving away free money. You don't need to be rich to make better decisions. And now you do.